I think everybody can see it now, right?
Cool. Yes, there's a question that's come through. We haven't started the webinar yet.
Troublemaker.
Are we going to?
Oh,
well, yeah.
You may as well. I'll cut you off as we get ready to start, but you can explore it quickly.
This is the icebreaker, right? So Chloe asked, do people think today's Twitter hack is bullish or bearish for crypto? It was very audacious. I only read about it briefly, but it's like a social engineering attack on a bunch of Twitter staff that enabled the hacker to get into or post as a bunch of very high profile verified accounts. And it posted kind of a donate or send your Bitcoin here to this address and I'll send you back double. And it's like Bill Gates and Obama and I don't know, haven't checked if they got any donations on the
addresses. They got like
they did
12 or 13 Bitcoin.
Oh wow, okay.
All right. Very good.
Yeah, that's
good one.
Very, very creative. Bullish, but is it bullish or bearish? I don't know. I don't know. I think it's just it shows you that social engineering is a really hard thing to protect against. So yeah.
All right.
Cool. So let's jump into it. Shane?
All right. Yeah. So thank you everybody for coming. I can see that we have, I believe, the vast majority of people are registered, and I know there are a couple even that have reached out to us and say they'll be joining a bit late. So we're just going to kick off here. So thank you all for joining us on what is sure to be the first of many of the collaborations between BDO and Block8 around distributed ledger technology and blockchain. Today, we're going to be hearing from Sam and Ryan, respectively from Block8 and BDO, who are specialists in this area around DLT and blockchain. They're going to take us through some really interesting points around the application of blockchain and DLT in financial services sector. But other than that, I've got a few other of my colleagues as well from blockchain, from Block8, Layla and Tim, who are also facilitating. So we're very open to questions during the whole process. We think it's the best way to explore the topic. So please feel free to use the Q&A and I'll be interrupting Ryan and Sam throughout this to bring them your questions if they don't see it before me, as will Layla and Tim. So I'll hand over to Ryan and Sam to introduce themselves and we'll kick off from there.
Cool. Thanks, Shane. And yeah, really excited to kick off the webinar today to discuss with Sam more about the use of the emerging use and growing use of blockchain and DLT in financial services. My name's Ryan. I'm the Associate Director at Technology in the Technology Advisory Team in BDO Sydney. Very much focused on helping companies deploy and plan and execute really on strategic technology projects. And certainly blockchain is one of those domains. So really excited to really delve into what's happening in this space today. And it really excited as well that BDO has been able to work and will be working further with Block8 as we partner together to help clients navigate an area which is very much emerging, but also evolving very rapidly. So really excited to be working with Sam and the team at Block8. And Sam, I'll pass over to you to give a bit of an intro as well.
Sure. So my name's Samuel Brooks. I'm the CTO at Block8. For those of you who don't know us, we're a full stack software and product development company. We do both consulting and ventures, and we're going to be doing a lot more product going forward. We've been around for about 4 years. We've delivered some of Australia's, or at least we think some of Australia's most innovative DLT solutions, and we try and contribute as much as we can to the national dialogue on the use of DLT in the Australian economy. In terms of myself, I'm just a complete distributed ledger technology nerd. I've been for the past 6 years originally an electrical engineer. I've had a bunch of roles in financial services, energy and law. Sit on a couple of committees, the Australian Computer Society Blockchain Technical Committee and the Australian Standards Committee on Smart Contracts.
Awesome. Thanks, Sam. So I think we'll just give you basically a bit of an overview today of what we're going through. And while we do this, we're just going to pop up a little poll just to get a bit of an understanding of who we have in the room and familiarity with the topic content here. So that should be on your screens at the moment. But today we're really going to look at both the strategy aspects of using DLT and blockchain in financial services, a bit of the why, and also the where as we explore some architectures and value chains and when, but then also look at some of the design challenges, some of the decisioning that you need to best step through when considering use of blockchain DLT and its appropriateness, and the different, I guess, different flavors, because when you say distributed ledger technology or blockchain, there are certainly many different types of blockchains for different uses. So we'll dive into a bit of that as well. As you can see, and then we'll have plenty of time for questions as well at the end of this, and Shane will be helping for any that pop up through the topics that we cover. So I think we've got most votes coming through. So if you haven't put your vote in, and you can, it'd be great to just we'll give that a few more seconds.
Probably I'll cut that off in about 15 seconds, Ryan, for you, and then we'll go.
And we're also, so as you can see, we're keen to understand both your familiarity, but then also the use of blockchain in your business, and understanding that it is emerging and it is touching on some businesses earlier than others. But we've got the results. I think you can share that, Shane. So we've got a bit of a mix, it looks like. On the familiarity side, we've got probably just over half learning and quite intrigued, and just under that have used blockchain or directly used blockchain before. And on the business side, we have a small percentage using it, around 13%, and probably an even split between those considering it and those also not convinced. So I think the not convinced will be interesting. I think we're going to talk through a little bit of that a bit later on, Sam, as we talk into some of the strategy choices and decisions, which is a really important aspect of it, beyond just the features and what blockchain can do.
Mm.
Cool. So let's dive into it. So I think the focus of this session is very much around financial services. One report BDO has actually just recently released, specifically on the banking sector within fin services, has been around, it's called Rethink, and very much reflecting on just where the economy is at the moment, given the recessionary and impact of COVID-19, and just where things are at. And I think the takeaway I got from this slide, and I thought it was really relevant to the discussion today, was that 85% of banks have made a digital transformation a business priority. So I think this really feeds directly into the conversation today. This digitization of business and value chains, and then the different models for that. So there's no sort of one size fits all for this. So I think it's just a really interesting takeaway as we set up the discussion on particularly where we're seeing blockchain in business. And this graph, I think, breaks it down a bit further across the entire ecosystem. This is obviously broader than FS, but we're just seeing the adoption and implementation of blockchain projects across a lot of different sectors, from capital markets, payments, trade finance, infrastructure, banking. So it's really just such a large category when it comes to blockchain use overall. So I just wanted to take it to you, Sam, and maybe you can take us through, like, why is that? Why does blockchain lend itself to being suitable, I guess, and people see value in using it in financial services?
Yeah, so I think, simply put, financial services deals with inherently abstract assets. So things like loans, securities, insurance policies, which more easily allows those assets to be natively digital or digitized. Sometimes this is known as the convergence of product and technology. Contrasted to an application space that deals with physical assets, such as more traditional supply chain, that's always been sort of at best represented physical assets digitally. But we'll always struggle, I guess, with achieving end-to-end process optimization and transparency, because the asset fundamentally exists outside of what the blockchain can apply consensus to. Often traditional supply chain and blockchain are bundled together as a perfect marriage, but in some ways it's really a hammer looking for a nail, given that operational challenge of getting good information onto the ledger. So we refer to that as the Oracle problem. So while potentially the start or the end of a financial services value chain includes some off-chain data, such as cash, property perhaps, there are a lot of interactions that can be made purely digital. And so if you think about it, financial services as a supply chain like any other, I suppose, is characterized by those abstract assets, which is the key for why it applies so well in financial services. And probably also it has fewer steps and actors end to end, with potentially higher complexity at each stage. So it's mainly that the ability to represent and program assets purely digitally.
Yeah, cool. And we've got a few, so we've got in this, just to explain this deck that we've got here, we've got a bunch of slides really that is designed to talk to some of the topics we're going through, but also as a takeaway for everyone. So we'll be sharing this this after the conversation. So I might just step through a couple of slides here. I think there's a couple of points you've talked to. Sam, is there anything you want to iterate here as I just pull up these dot points? So I think you've talked to the types of assets. Do you want to just expand a little bit on that?
Look, I think the key takeaway really is that, if you think about what the function, or what one of the original functions anyway of blockchain is to represent who owns what at a given point in time. So you can do that with the representation of physical assets, but it's just a lot easier to do with purely digital assets, such as those found in financial services, because you can you don't have to worry about the external world. You don't have to worry about the analog space. You just worry about the purely digital space.
So so given that application, then that kind of natural fit you're sort of talking to there in terms of financial assets, I mean, how do you then know that a financial services institution should actually want to adopt this kind of tech, given their existing very much sometimes complex setups already? Like, is blockchain actually the right tool for the job on these things?
Well, that depends. And the answer to that usually comes as a result of a conversation with me. But you have to look at the financial or economic relationships with your suppliers, your competitors, and your customers. And you need to be able to identify somewhere where you're sharing, well, at least you're intending to share some piece of information that's of value between two or more parties. So it's rarely useful in situations where you've just got a single entity. It's best applied when you've got more than one entity, and where you don't necessarily trust the other entity. So it's a technology that replaces the need to trust an intermediary to facilitate a transaction, such as, say, the ASX to facilitate the buying and selling of a listed security, or the requirement to have a lot of operational overhead to ensure yourself as one entity to that transaction, that the information that you're using to make a business decision is actually correct and you can actually use it.
And how does that look for, like, you talked about blockchain being naturally suitable for multi-party kind of setups where you're sharing a view of a single asset across many actors. I mean, what does that look like then for a company in terms of an approach or a solution? Like, how does that actually play out? Well, obviously, there's going to be differences there depending on what angle you're looking at and particular use cases. But could you just describe that a little bit?
Yeah, so there's different ways to set up a smart contract or a distributed ledger. When you've got sort of a linear transitive relationship, you could simply just call that a value chain. Expanding that, you would have a network arrangement where you've got, let's say, 3 or more entities all collaborating on the same piece of information. So that might be a consortium application where, say, for example, you've got some non-value adding process that a number of businesses of the same type within an industry all kind of want to share and outsource into a shared application, as opposed to every individual company reproducing that same process. So think about KYC or something like this, notwithstanding the regulations. So in that sense, if you had, say, 10 companies that were all in the same industry and 5 of those companies got together and decided to outsource this common process and have a shared application and manage it between them, that could have, for those 5 companies that were cooperating in that consortium, you would have a lower cost base to serve your customers.
And do you think, I mean, it's quite interesting because obviously you'd need an initiator or a kind of a collective agreement to pursue that between the different parties. What's your view on maybe Australia versus globally on the appetite for that? Do you think there's a really an understanding to that approach, or is it still something that is being learned as a lot of these companies go through POCs and stuff like that?
Yeah, look, I don't think there's fantastic understanding of how this technology can be applied. I think we've got a long way to go before the benefits and the types of applications penetrate corporate Australia and globally probably as well. But I guess that's really a part of, our role to educate decision makers, at least in Australia, as to the benefits of the technology and how it can be applied.
Yeah, I completely agree on that. Like, I mean, it's partly, we're having these conversations, I guess, to sort of tease out some of those questions and put some of that thinking on the table as well to broaden the view of some of these benefits, that's for sure. So I'll just jump ahead. I think we've...
Oh, right. Ryan, can I interrupt you and Sam for a moment? Just keep an eye out of the question. There was a question from the audience there because you mentioned the Oracle problem. One of the audience was asked, looking for your opinion on if you're familiar with Chainlink and the impact that might have on the Oracle problem.
So Chainlink is a decentralized more or less, a somewhat decentralized, probably, I don't know, maybe a 6 or a 7 out of 10 decentralized solution to the Oracle problem, where information is available to a blockchain that's come from a decentralized source as opposed to a centralized source. That is one solution to getting information into a blockchain so that a smart contract can operate over it. There are a range of solutions, and it really depends on the use case to determine what kind of information injection would be appropriate. So yeah, that's one particular technology or solution, but there are lots of others.
Yeah, I think the interesting word is solve. I think, yeah, like you said, that'll completely depend on the use case and the type of application that's utilizing Chainlink, I guess. But it's certainly an interesting, and I think there's a few, there's even, like I read about band protocol, and they're kind of saying Chainlink isn't decentralized enough. So I think, yeah, that's the interesting aspect of these things. There's rapid innovation happening across the ecosystem, which is pretty exciting to sort of follow.
All right, thanks, guys. Cheers.
Thank you. Sam, I think we talked on a couple of things here. Was there anything else you wanted to touch on as I just click through?
Just in terms of when to use DLT?
Yeah. Like I think I guess, yeah, I think we'll move into the architecture value chain sides, unless there's anything you want to talk to.
One of the important things to keep in mind when thinking about any sort of digital transformation is that a smart contract or a distributed ledger is a fundamentally different technology to, say, a centralized database with an API wrapped around it. A distributed ledger is used to share truth about some piece of information, right? So this is in contrast to an API or a centralized system which fundamentally cannot share the truth about something. So if you think about it, if you utilize an API, what you get back is really only a report on the underlying system of record or underlying source of truth. We call that in Block8 opacity. The other issue with APIs is that the information you get is immediately out of date as soon as it's received. So we call that obsolescence. So these two problems are potentially something that can be designed around with an alternative technology to a centralized database with an API wrapper. So the only real way that we do it today to deal with these sorts of problems is, as I sort of mentioned before, you need some additional operational apparatus that manages that business relationship, or you have to pay a third party to manage that transaction, such as the ASX example. Both are expensive prospects. So that difference can be subtle, but it's pretty important. I think I put something on LinkedIn a little while ago which said something like message-based systems, so APIs, work by your counterparty hiding the information from you and you needing to trust what you're told from your counterparty. So that's the API. Whereas a state-based system, i.e. a smart contract, they work by your counterparty showing you that information so you can see it for yourself. And that's kind of a nice little way to think about the difference between the two information technologies. So you use DLT whenever you have an asset that has more than one interested party, or indeed a business process that spans more than one entity. So instead of coming to agreement about who owns what, you can come to agreement on a broader set of things, like at what point of a process are both of these parties up to when they're managing a business relationship. So DLT is all about automating financial relationships.
And I think that's probably a good little hop into the next question that I have for you, which was really about unpacking a financial services value chain and what that could look like, I guess, when a DLT solution is in place. So do you want to maybe just talk us through then, essentially a bit of a follow-on from what you were just talking around, the differences there in terms of what is currently generally in place, to then how that may apply in the FS space, and also some of the typical actions, events that would occur. I think you've talked to some of the pain points. I think that's the next slide.
Yeah, I've got there's a couple of diagrams, I think, on the next slide that we can talk to.
There we go.
So it's a little small, but hopefully everybody can see that. So this is a simple representation of a securitization value chain. On the far left, you've got a borrower for a home loan. You've got an issuer, or in this case, we'll call it a manager for that asset. You've also got an attached insurer, and you've got a warehouse that's supplying that funding. But then when that central manager issues the security, all of a sudden, with a legacy system, with an API-based system, you can only ever share a reference to the underlying source of truth, and it immediately creates that opacity, as I mentioned before. And this is propagated throughout the value chain. So as other investors buy that bond or that note, and then as other funds package those securitized assets and reissue even more securities, you're just getting further and further away from the source of truth. And for anyone who's familiar with, one of the fundamental issues that caused the global financial crisis, the inability to directly view the underlying information contained in that asset, or the quality of that asset, was a major issue. So at the end of the day, we're looking to replace these references with the actual authoritative source of the information. So this in particular, I guess in summary, as it says there, it impacts the ability for businesses to make decisions on the basis of asset ownership, and the ability to satisfy regulatory requirements as well when it relates to asset management. If anybody is familiar working in operational risk within a large financial services organization, they'd be quite familiar with a lot of the operational controls that go into managing information.
Yeah, it's quite interesting. And yeah, there's, regulatory reporting has been growing significantly. I know over the last few years with everything APRA is now requesting from a lot of the banks, and it does put an overhead on delivery of that data in a timely, transparent fashion. So it just makes me think, like this slide here talks to, I guess, the traditional plumbing, you could sort of say, between these different actors for a securitized type asset. So how do we do you see it that, and maybe I'll flick to the next slide, which is your DOT one. How do we transition, or how does that leap into the world where that plumbing is replaced or upgraded or transformed, pick your word, to where we have a DLT solution?
Yeah, plumbing's a good word. Plumbing's a great word. I don't know why everyone thinks blockchain is so sexy. You're really just dealing with the pipes that interconnect businesses. At least from a distributed ledger perspective, there's a whole other conversation around public blockchains and stuff. But as you can sort of see with this representation, all of the actors that have an interest in that asset are connected to the same source of truth. So using a DLT-based system, all those asset positions are consistent across all of the interested parties using a common set of data rails. And given that asset is shared between all of those network participants, shared logic can also be applied to those assets as well, so that you can then automate those into business workflows. Yeah, and in terms of how do we get there, I think it starts with stuff just like this. We need to squash that 44% down to zero who aren't believers, and make sure that technology decision makers are armed with all of the correct information to make the right technology choices when it comes to digital transformation, and they're aware of the options that are there.
I just might jump in there because I think one of the questions from Alex may just help explore this with everybody. So they're obviously one of the more well-recognised programs out there is ASX's CHESS replacement project around tracking trading, as we all know. So the question is the CHESS replacement truly a DLT? Each node will only have access to their own transactions. So I suppose, you know, in the context of what you're exploring there, Sam and Ryan, what are your thoughts on, and your personal opinions, I suppose, let's be clear, on the CHESS replacement and its place in the DLT universe?
I can take that if you want. Yeah, maybe I'll just say, yeah, you have, obviously we talked around, there's different flavors of blockchain and DLT, and certainly the ASX has selected one solution architecture. But yeah, Sam, do you want to maybe talk to this? I'd
say it's a fair characterization. The ASX themselves say that they're solving the reconciliation problem, which is a nice way to put it. The difference with the ASX's design is that the consensus is centralized. So you need to trust to a certain extent that the updates to the ledger are going to be appropriate and according to the smart contracts that are written between the ASX and their market participants. Fundamentally, it is a distributed ledger because the information does span between those entities, but the consensus doesn't sit with those two entities. It actually just sits with one of them. And even though that's the case, you can still verify after the transaction has taken place that the ledger is has been changed according to the rules that govern those state changes. So you can say that with their design, and it is an appropriate design, that they've traded off some of that trustlessness for more performance, because it's more of a trust and verify than necessarily a completely decentralized trust arrangement, but it's definitely still a distributed ledger.
Yeah, and I think that talks a bit to, I mean, it's probably getting a bit deeper, but these governance models you can have across multi-party, multi-actor kind of networks, essentially, and that's certainly a spectrum. I think we'll get a little bit into that when we get to permission and permissionless later.
All right. Thanks both. Yeah, that very much sounds like those comments you had around the use case and what it's there to serve and do around DLT to make it useful. So ASX have a vision about what they want it to do. So thank you. There's a few more questions, but I think let's get you moving along and we'll weave them in.
Yeah, cool. So look, we'll jump into maturity. So really interesting sort of point in time, I guess, where Gartner's known for assessing technology trends, and this is from their strategic technology trends for 2020. And they've, some of you may be familiar that blockchain was in a trough of disillusionment, possibly still is. But certainly we're in this, I think, transitionary phase where we're seeing a deployment phase is a term I hear a lot, where a lot of POCs are going to production and likewise. So what's your view on where we're at, and is DLT going to be the best choice, I guess, for some of these companies, or is it better to just stick with what they have?
Yeah, I mean, I think I read something last week that from Gartner from late 2019, which said they expect over $3 trillion of business value to be added to the world by the end of the decade. So, you know, even if that's 1/10 true, that's still a pretty exciting opportunity. I mean, I've heard quite a lot that blockchain is just a slow database. The reality is that comparing a distributed ledger with a centralized database is not really comparing apples with apples. It's strictly true that blockchains are slow when compared to a centralized database when it comes to data write speed. So it can take, while it can take, I guess, between say 3 and 15 seconds to commit a new entry to a blockchain or a ledger, those transactions should not be seen as the speed of a database, but more the lower limit of the speed of your business process. So going from a month or a week down to 3 seconds is quite a substantial improvement in efficiency. So you've got to remember, DLT facilitates the business domain, not the data domain. And so, you know, the information in question that we're talking about, that the smart contract is managing, could be the lodging of a procurement request. And a few seconds later, on the next block, the request could be fulfilled and paid, all without relying on an intermediating party to provide a platform to facilitate that trade. Ultimately, blockchains, they do a different thing than a traditional database. They uniquely give you and your counterparty real-time operational speed according to the rules that you've agreed.
So that decision point, I guess, and I think I've got this next slide, which talks to decision models, and there's a heap of these floating around at the moment on the internet. Different flow charts to tell you if you need this kind of technology solution, whether it's a blockchain or some other kind of flavor of a database in between, depending on your exact use case. Obviously, it's going to vary for businesses because every business is unique. They're doing different things. So how do you approach that? Like, how does a business, particularly a financial services company that has, like we're getting at before, a really possibly quite mature, complex set of integrated technologies already as part of their IT architecture, how do you go about either integrating or replacing to get to a DLT solution?
So in all cases, you need a business case, right? You need to have a return on your investment. One of the first questions that you need to identify is whether or not the initiative is looking to develop a new product or whether they're looking to strip out cost. So that can be quite different approaches. You need to, in the first conversation, assess the nature of their business and financial relationships in terms of valuable information. How are they interacting with customers, potentially their competitors, or maybe not, but they could be, and their suppliers. You have to look at their non-functional requirements as well, such as performance. So, are they doing, say, 100 low-value transactions per day, or are they only, say, doing one extremely complex transaction per week? Things like that. You need to very closely assess the privacy and confidentiality requirements as well, because there's often there is a direct trade-off between transparency and privacy. Sounds obvious when you say it out loud, but often you get people or projects espousing the benefits of transparency for their supply chain use case, and they often completely ignore how to actually deal with the loss of confidential information. So those things need to be carefully designed. And in all cases, the solution needs to be developed according to the requirements, and those requirements need to be correct, and it all has to go into a business case.
Yeah. Cool. I think I wanted to leave some time for QA. So, and I think we've got some questions banking up. So we might just jump into a couple of last slides. I think we've talked a little bit around risk and programmability. And these are some takeaways, I guess, for everyone for later on. Is there anything you want to touch on I think you've talked around the database argument?
There was the other one. Okay, DLT lacks maturity. So that's true. That's harder to refute because it's based on opinion. You know, you could also say that legacy stacks are incredibly fragile and expensive to maintain. So I worked in banking before. I know how much of a ball of wire is under the hood.
Yeah.
So, you know, this is where your proof of concept, proof of value often comes into play. That's generally how most larger enterprises deal with satisfying themselves that there's nothing actually experimental about blockchains. They're just a clever combination of existing technologies that some of which have been in development for over 100 years. You know, we're talking about cryptography, consensus algorithms. So it's really just a novel combination of those components, which gives, from which emerges this this new capability. So yeah, there's nothing magical or experimental about it. It's just software.
Yeah, and I think that's a good point on the proof of concept, proof of value. Like, it's that methodology. Certainly at BDO is a similar approach we've taken with technology projects, from business case to a POC or a POV before you go into pilot production. So there's a, yeah, like you said, I think a tried and tested methodology there that works for any enterprise software, but also very applicable to a DLT or blockchain solution as well.
Mm.
So we'll just jump into what have we got left? We've got a few minutes. I think Shane, should we do some questions perhaps?
Yeah, I think so. Just been looking for the right place to weave. There's a few detailed ones, so everybody's got a bit more of one that I think is going to be great for Sam and Ryan to explore. I'll shed you in at the end. But Gabrielle asked around, I think let's maybe combine two of them. So what are the current apprehensions for the adaptation of DLT and financial services? And is it truly more costly as a solution? I'm sure there's going to be a lot of context in those answers, but thoughts on why financial services might have some apprehensions, and is it more costly?
Maybe you take the first one, Ryan. I'll take the second.
Yeah, look, apprehensions. I think for sure, right? It's a significant architecture change, deploying or even going through the design phase for what DLT blockchain solution might look like. And I think that's where we see a lot of the innovation happening at new startups, at new fintechs, because they're not obviously encumbered by the legacy technology that some of the incumbents, banks and ADIs certainly have. So certainly there's different starting points, I think, depending on where the business is at and what stack they have. And certainly there are, again, a lot of the big banks are going through massive modernization programs. So they are actively taking out old tech, putting in new tech, but it's still obviously complex architectures. And I think that is a slow process just due to size and scale. And the regulatory risk, I think, is another aspect of it. Particularly as Sam was talking around when it comes to data handling and information management and security, that's for sure.
So the costly one, in terms of sustainability, I think that means in terms of total cost of ownership. So that question may be originating from the fact that you're inherently creating redundancy in an information system because you've got two entities operating the same information system as opposed to just one or two or more. So that yes, that natively increases some of your architecture costs, some of your information architecture, information hardware costs. But in terms of total cost of ownership, I don't think so. I think at the end of the day, if you're deploying that system in order to reduce headcount or reduce unnecessary, in the context of a distributed ledger, processing in order to streamline an end-to-end process, so you don't have to have a whole reconciliation team, for example, if you're transferring cash around between financial institutions, then the cost goes down dramatically. The cost of a computer is far cheaper than the cost of a person, and you can probably run 1,000 computers for the cost of one individual. So the idea is that make these businesses more efficient by using clever technology, and those roles are no longer required, and those resources are freed up to do other things. So hopefully I've answered that appropriately.
Yeah, I think you have there, and I think combined with both of it, and just reflecting on the points you made earlier, and certainly discussions Ryan have had and I have had, if it costs $1 million, but you're making $10 billion of it, is it really that expensive? Is the cost of the problem and the apprehension? These are all explored in the business case that brings everybody to a common understanding of what's being aimed for and the costs involved to achieve an outcome. So I think you guys were talking about that earlier. So yeah, thanks for that, Gabrielle.
The other thing is transformation projects are kicking off all the time. So a big thing to keep in mind, or a key takeaway from today, is probably if you're a technology decision maker and you've got a potential need for an information technology transformation, consider using a distributed ledger where it makes sense. Because if you're already going to spend the money to rip out all of a whole bunch of on-premise legacy systems, replace it with a brand new cloud-based solution, then you've got more than one option to do this, and it's just another tool in the shed, and will derive benefit if applied appropriately.
All right, just keeping an eye on the time. I think I'll move you guys along.
Yeah. Thanks, Shane. Well, look, we'll just finish off on, I guess, and I think this talks to some of the questions. Platform choices. And this is just another one of the Forbes slides from their deep dive, and we'll talk a little bit just on again the flavors of blockchain. But you can see here, there's certainly on the enterprise space, Hyperledger Fabric, Enterprise Ethereum, R3's Quarto is really the top 3 solutions at the moment. So I think this gets down to certainly some design choices. But Sam, do you want to just take us through the model? I think that's on the next slide here, that you think through in terms of features.
So it's pretty common to only consider there to be public or private blockchains, but deployments really exist on 2 dimensions. One is whether or not the validator set is permissioned or is not permissioned. So that's a validator set of the other computers that can actually run the software. And then the other dimension to consider is whether or not the information is public for everyone to view, or whether it's private and restricted to only a small set. The reason why those 2 concepts are often conflated is because often you've got sort of one quadrant or the other, but there are very much the off-axis quadrants as well. So an example of a open blockchain that's permissionless but is private in nature could be Zcash or Monero, if you're familiar with those fully encrypted solutions. In terms of a public permission blockchain, I think they're going to become a lot more popular in the coming years to operate things like public information registers. So I'll probably leave it at that.
Cool. Look, I think we are getting a bit squeezed for time. I want to just leave some room at the end. So what I'll do, I think I'll just do a quick Where's my slides?
While you do that, Ryan, I might launch the next poll just to try and start a bit of a sense from the audience, if that's all right.
Yeah, please do.
Thank you. Everybody just keep an eye out. I'm going to launch the poll in a sec once I catch up to where it is. Just on, your thoughts now with hearing some of the information on where you went from the start of this and where we asked on DLT to post a question, post discussion.
Yeah, great. And look, just while that pops up on the screen, just a bit of a wrap up, and this will be in the slide deck which we send out. I think this is just a little bit of a summary of some of the skills and capabilities that BDO and Block8 are bringing to the market as we look at innovative blockchain solutions. So feel free to please get in touch with Sam or myself if you do have questions on what we've discussed today. And it has been a very just short time to touch on some of the key areas, but I mean, I'm sure we could talk for many, many hours on this topic. It's multifaceted and certainly very lots of different opinions and views on the benefits and use cases for blockchain and DLT, that's for sure. So it's yeah, it certainly keeps it interesting. But please reach out. There's our contact details on this slide. So you can reach Sam and myself on email, websites, LinkedIn, Twitter, and also we've got some great resources which will be linked here in the deck as well. So, Sam, any closing remarks before we just jump into a few questions?
I noticed that no one has put any votes in. I still don't think there are benefits yet.
It's indicative of the quality of the presentation, guys.
Now somebody will just put one in there.
Well, if that's all right, then we had a few questions, and one I think is a particularly interesting one, and is from Angela around cybersecurity, guys. So there's a discussion here, and Angela's given us a lot of information. I might just try and condense it, talking about the use of DLT to prevent a number of, let's say, compromising business processes and hacking, and how you feel, Sam and Ryan, that DLT might help with that cybersecurity challenge around breaking processes and breaking into systems. We've already talked about Twitter, so you can't use that example today. But how could DLT help cybersecurity?
I don't think it does, is the short answer. It's not really an area that it would find a really good home. Information security always will be there, whether you've got a legacy system or a distributed system, in exactly the same way. A lot of, because you've got workflows that are operated atomically and immutably using a distributed system, you often have the concept of multi-signature authorization and authentication, but you have that as well with centralized systems. So I don't think there's very much scope within cybersecurity itself, but perhaps within some of the business processes that cybersecurity wraps around, there may be application within there.
Yeah,
that's the short answer.
Yeah,
no, I think you go, Ryan.
I was just going to say, yeah, it may not directly mitigate threats. It may just change threat types, perhaps, like if there's, I think the question talks around like, fake invoices and stuff like that. If you do have that single source of truth on, payment arrangements or assets held, there is possibilities there, but again, maybe the threat changes. So yeah, I think it's one of those evolving spaces.
Yeah, and I think you're both spot on. I mean, cybersecurity is a very complex topic within itself. Cybersecurity and firewalls is not really a blockchain type, but securing the information within a business so that it becomes immutable and can't be altered is going to prevent certain things that cybersecurity attacks lead to. and harm companies. So I think it's a complex, and maybe there's some crossover, but the use case is not firewalls.
Look, I think there are. Yeah, I mean, again, this is one, but like, you know, if you've got a closed permissioned ecosystem with various participants running nodes that are validating transactions, you know, how do you ensure a secure environment so one of those nodes isn't compromised? So there's governance things there's security layers things. I think there's it's certainly, I think it doesn't reduce the role of security. It heightens. It becomes more important.
Yeah. There's definitely going to be a lot of security jobs going in the future, Angela. At all. One thing you probably could call out in terms of blockchains is that it operates on a consensus mechanism. So where you've got, let's say, a large consortium of let's say 12 participants, the consensus algorithm that is selected is often what's known as Byzantine fault tolerant, which means that even if up to a third of the participants have been hacked simultaneously in an attempt to forge an incorrect entry onto the ledger, the consensus mechanism will pick that up and won't listen to those 1/3 participants. So it's quite resilient from that perspective.
Okay. Now, we did have a question from Joshua. Just in the interest of time, I know we're up against it. Joshua, sorry we haven't got to it. It is a complex one. I'll ask Sam and Ryan to reach out to you around that, because I think it's a really great question that they'd love to explore with you. So.
Fantastic. So look, it's almost on the dot. So I don't want to keep people from dinner time and possibly other meetings and things, depending on which time zone you're in. But it's been really awesome, Sam, to chat and talk blockchain and DLT in financial services. There's certainly a lot to cover, but always really great to dive into some of the details. So thank you all to for everyone who dialed in this afternoon, and thanks Shane, Sam, and the Block8 team. Yeah, I think anything else to close there with, Sam?
Thanks for having us. You know, I think there's a lot to do in terms of education. We're going to be doing a lot more over the next few months. I think we'll even be holding quite a few more webinars. So definitely, if you're interested, check out our stuff on our website or on LinkedIn. You can follow us, and you'll get all the best information you can get.
Yeah, keep in touch, reach out, and we'll send through links for the video on the deck shortly after, well, maybe Friday or Monday. Soon, it'll be in your inbox.
All right.
Thanks all.